We are into the last week of the month. The following week, 28th to the 2nd of December, will show the monthly trend reversal. Then from that of the 1st of December till end of January, we'll come across the yearly trend reversal. So those trend reversal moves are going to be highly volatile. So what you come across here in this week, Euro and GBP are near that of the low set for the season, and also USDN near that of the high set for the season. And they are expected to make the swing and rise moves. Euro and GBP are expected to make the swing and rise move in order to do the impression that they could recover after that of the Thanksgiving. As I explained last week, that for Thanksgiving, many of the traders liquidated their positions before going on holidays. So the players kept all the market low, giving that impression that USD is expected to continuously gain, so that they will not be willing to carry the position till they come back. So they just liquidate the positions and go for the holidays. And then later on, the players make the move of their nature, and you know that they act against that of the traders once they committed the positions. So when you see in FX Trade and other places, everywhere people are telling that USD is the king which is going to gain continuously. But I don't call USD as a king, but instead I call it as a sleeping giant. And this sleeping giant will wake up and make a havoc and again go to sleep. This is what happens every time. And why it happens like this? Because the players create the USD weakening sentiment in the market and continuously accumulate the positions in the case of Euro, GBP, USD, etc. and try to create the feel that USD weakening is unstoppable. Then freely the traders start buying at a higher levels, and once the traders lose their faith of selling Euro and GBP and start accumulating buy positions in Euro and GBP, then the players change their strategy. They simply offload their buy positions in the market when the traders are freely willing to buy at a higher levels, and later on they just allow the market to melt down. This is what happens every time. So normally to rise the market, it takes several months, but to drop it in a few weeks or a month, they just liquidate and induce the traders to liquidate as well by making quick drops. So in a shorter time frame, when they make the quick drops, and you find that the market becomes highly afraid of buying any buy positions in Euro and GBP. But when the traders are willing to sell, the players accumulate all their sells and they become long in other majors. This they do it every time whenever you come across the US elections happen. So they have to necessarily do this in order to accumulate huge profit and share it with the respective people. And this is why you come across such massive moves happen. And you know, in 2008, such a meltdown happened during that of the election time. So every time you come across that players quickly gain the levels and then offload and book profit, and that profit is being shared so that they are being taken care of for the rest of the years to come. So the richest in the world have got huge amount of money, and that has to multiply in order to meet with inflation. So it has to earn. So such players, they deploy all the money through that of the private banking arms into that of the market and use it for market rigging, and also use their influence to create all the market sentiments and act against that of the traders so that they could continuously gain the levels and gain the profit. So you find that invariably the market is being manipulated. So we need to understand how they are going to manipulate so that we'll be able to trade in line with them and try to earn money. So my entire forecast is focused on that. So how they are going to make the rigging. So for that, we need to know the timings of the market. And these timings are given it here. And during that particular time frame, what sort of move they are going to do it. They are expected to make the lower level swing and form up. Then again, higher level swing and slide. That's how yesterday they had done it and then formed up during the US session. And today, again, they are expected to make the lower level swing and quickly rise during that of the late Japanese session from 6 to 7:30 GMT. Then again, they are expected to make the swing and form up slow gains and quick gains during that of the US session. Then they are expected to gain quickly during that of the Japanese session on Wednesday and then book profit. And then they are expected to make the slide, swing and slide during that of the European session. And again buy back and quickly gain the levels. And then on Thursday, they are expected to make the slide during that of the Japanese session and firm up and rise during that of the European and US session. Similar moves are expected to happen on Friday. They are expected to induce the long holders of the lower level long holders to liquidate the long position before making further rise. And what you come across now, that USD yen gain is unstoppable, but you will come across USD drop is unstoppable. That is how they try to make one-sided move in the case of USD yen and start gaining the levels in the case of Euro and GBP. As I told you last week that they have been holding Euro and dropping GBP mainly to handle Euro GBP cross and also the European crosses. And now you come across they hold Euro and gain levels in the case of GBP. Again, make further drop in the case of Euro GBP. And then they will continue to gain the levels in the case of Euro and hold GBP and then gain continuously in the case of Euro. That's how they make alternative moves in order to handle the crosses as well. So keep in mind the players handle two pairs at a given time and identify those two pairs which they handle at a given time by referring to that of the initial lows, referring to that of the highs and the low, and wherever the currency which has made more than 40 pips spread between high and low, they are the currencies they are handling. At the moment, they are handling USD yen and also GBP. And you find in the other currencies, the swing is lesser nature, less than 40 pips. So they handle Euro GBP, Euro USD yen and GBP at the moment, and then subsequently they will start handling one by one the other currencies by making the spread between the initial, making the spread between the high and the low more than 40 pips. So commit positions in such currencies. So when USD yen is near that of the high and not breach the high for more than 30 minutes during that of the late Japanese session, you can take a sell so that it will be able to make the slide and you will be able to book profit. Similarly, when they are not breaching the initial low set in the case of Euro and GBP for more than 30 minutes during the start of the late Japanese session, you can take a buy and then quickly book profit during the gain. So that way you can try to do the trades.